US could go bankrupt by June 5th if debt ceiling is not raised. So that's what Janet Yellen, Treasury Secretary, said. And what is the debt ceiling? What could happen to us if US default on its loan? How could we profit from this situation if a stock market crash? That's what we're gonna talk about today. And at last minute, Biden and McCarthy reached tentative US debt ceiling. But this is not signed into a law yet, so there could be any change. So I'm going to talk about if there is a last minute panic in the stock market, how could we make money? It doesn't matter if US go bankrupt, as long as we make money, that's going to be a profit for you and your family. That's what's most important. If everybody knows how to make money and profit, US will not be in this bad situation. Debt ceiling is like alcoholic limit. Alcoholics come together and negotiate. Hey, we can only drink 1 bottle a week. Then they change their mind. Let's try to drink 3 bottles a week. Then they get together again. Oh, the alcohol is so good. Let's try 5 bottles a week. Then they come again together. Let's try 1 bottle a day. It's like that. Republicans and Democrats, they try to raise debt ceiling. Every time they borrow more money, they need to raise the debt ceiling. So it's not a good idea. But if everybody knows how to make more money, everybody does not need to borrow money. If everybody can pay off their own debt by using stock investing, stock trading, stock options, we will not be in this situation. That's what I'm going to teach you today. How much did I make last Friday? Let's look at it. On May 26th, last Friday, I made over 1,400 in one day. I spent only about 30 minutes. That's the power of stock trading and option trading. How about on Monday to Friday for 1 week, 5 days? I made over 2,900. This is the realized gain. Total gain, short-term gain. How much commission did I pay? Only $10.50. You invest $10.50 to gain 2,900 over. Of course, that's a good deal. And when you trade stock option, you can borrow margin. And when you sell options, you don't need to pay any interest to stockbrokers. How good is that? Where can you borrow money without paying interest and you keep all the profits? It's selling options. That's what I did. So you ask me, why isn't everybody successful? Because on Tuesday, May 23rd, I only made $65. A lot of people lose money. They give up. So if I give it up on Tuesday, I don't want to trade anymore. Do you think I would have made over 1,400 on Friday? No, of course not. So during the bear market in 2012, everybody gave up because they invested in one stock. The next day, the stock dropped. Then after that, they kept buying. The stock kept dropping. The stock market kept dropping. So they gave up. Stock market is a scam. I kept buying. Why? Because I know that as long as the companies are making money, we are getting more productive. Now AI is coming along. We are getting more productive. Then we will make more money. So I kept buying. So a lot of losers. Most people are losers. They give up before they succeed. They don't invest in their education. They don't keep trying. So never make that mistake. Then you will have lost out on big gains. Everybody loses money. That's very normal. I lost money, but as you can see, I gained more than I lost money. So that's why you will see profits. These are the exceptional results. Most people may not get these results, and most people may not work hard to get these results. Remember, all investment have risk. Invest or trade only what you can afford to lose. Even if you put your money in the bank, you can lose money. There is no guarantee in life. This video is not for financial advice. Today's topic is US may default on its debt by June 5, 2023. What is a debt ceiling? US has a high debt to GDP ratios. Is it bad for the stock markets? We're gonna look at some data and comparisons. When stock markets crash, what could crash the stock markets? It's not what you think. How to profit from stock market crash? I'm gonna give you my present. What is a debt ceiling? Every time US borrow money, they incur interest rates. They need to pay interest. So just to make sure that US is not borrowing so much money, debt ceiling was introduced in 1917. Every time a debt ceiling is reached, lawmakers, Republicans, Democrats, Independent, all the parties have to come together to make sure that US increase revenue or decrease spending, or they need to raise debt ceiling. Of course, they always try to negotiate to reduce spending, to increase revenue, but there's only so much they can do to reduce spending. Every time they introduce a welfare program, it's really hard to take it away without losing votes. So the end result is that they kept raising debt ceiling without introducing so much of spending cuts or ways to increase revenue. If you look at it, debt ceiling was raised so many times before, so I expected this time around for them to raise the debt ceiling the same way as before. So nothing to worry about it. But one thing that concerns me and probably everybody in US or everybody around the world is if credit rating agency downgrades the US debt, US needs to pay more interest. So if US needs to pay more interest, you and I as a consumer, we borrow money for our cars, for our houses, credit card debt, we need to pay more money. And in finance, the risk-free interest is based on US debt, US finance. So if US debt is no longer considered risk-free, all the financial modeling have to be changed. All the other debts from other countries, Japan, South Korea, Germany, UK, they are priced based on US debt. US debt is considered the safest in the world. All the other debts are priced in addition to US risk-free rate. So you can see how much it can cost more to the world if credit rating agency downgrades US debt. US debt to GDP ratio is now 139%. Is it really bad for the stock markets? Japanese debt to GDP ratio is 263%, so which is double the US. But their stock market jumped 20.22% year to date from January 1st to May 26th. So everybody kept investing in stock markets. So what drives stock markets? As long as the companies in that market are making money, like in this time Japanese or in US S&P 500, the companies are making money, making more profits every year. Investors are gonna keep investing in those companies. That's what drives stock market. We don't have to worry about it as long as companies like Apple, Amazon, Google, Tesla, Nvidia, they keep making free cash flow. More free cash flow means more income coming to the investor, so they will keep investing in those companies. And I'm not worried about it for the stock markets. Even if US borrow much more money, up to 200 debt to GDP ratios, Japan right now has 263%. So who owns US debt? Basically 6.8 trillion in government accounts, 24.5 trillion in American public. So government accounts 22%, public holdings is about 78%. So 22% is transfer between left pocket to right pocket. It's just like family. The father borrows money from the sons needs to collect the money from the father, or the other way around. Father lends money to the sons, and the father needs to collect money from the sons back. So left pocket, right pocket. So I'm not really worried about it. If they can pay, most of the creditors are their own. So the 2/3 of public debt is held by domestic holders, and the other 1/3 is held by foreigners like Japan, China, UK, 30 plus other countries holds the biggest chance. So do you think the US gonna damage their relationships with these countries by not paying its debt? No, I don't think so. It's just like having so many girlfriends. If you don't want to take care of them, and they're gonna break up with you, and you don't want to do that. So US not gonna do that, because US has one of the biggest economy in the world, and in terms of nominal GDP, it is the biggest economy in the world. So if they default on a loan, it's gonna be really, really bad for everything. Foreign diplomacy, financial markets, globally, it's gonna look very, very bad. And soft power is very important, especially when US try to gain over China in terms of soft power diplomacy. And so how much it costs to protect insurance? Basically, if US default on its loan, how much is the insurance cost? The cost of protection only indicate 2% chance. So that means that the cost of protection is not high yet. If it's 90% chance, you will see it shoot up a lot more. And sometimes they may not want to insure against the government debt if the risk is too high. Just like home insurance. If you have so many problems in this home, a fire breaks out, the roof is broken, or the water heater. If so many problems, the insurance company not gonna insure your house. And if you are driving and you get into so many accidents, your insurance rate is gonna go up so high, and they may not want to insure you anymore. The same way like this. But what could crash the stock market is the downgrade. First, considers downgrading US debt. So you're gonna ask me, hey, what's so bad about downgrading? If credit rating agency downgrades US debt, US need to pay more interest to borrow money. So it's bad for everybody. And public may lose trust in the government. If the government loses trust, it's harder to borrow money, and their foreign diplomacy may not be as powerful as before. So there are a lot of repercussions. Downgrade could cause the stock market to crash. We talk about the debt ceiling, we talk about debt to GDP ratios, we talk about stock market crash, and we're gonna talk about what happened in 2011 and how to profit from a potential stock market crash. Let's look at S&P 500 in 2011. US government needed to raise the debt ceiling by August 2nd. They raised it on August 1st. If you look at it, this is S&P 500. If you look at it on August 1st, nothing changed in the stock markets. It was ups and down. It's very normal, ups and down, very normal until August 5th, a stock market crash. So what happened on August 5th? If you look at it right here, August 5th, stock market crashed all the way down. See, right here, crash all the way down because S&P 500 downgraded US debt from AAA rating. So it was really bad and stock market crashed. Of course, a rumor already started, even though the US was able to raise the debt ceiling by August 1st. The rumor already started, so the stock market started panicking. Then when it really happened, it just panicked for a short while. Then what happened in the end? The stock market went up again. So that was an opportunity. If you have extra cash, you could basically buy some of the stocks that you like. I'm hoping that there will be a last minute panic in the stock market, so I could buy more of the stocks that I like. And right now, S&P 500 year-to-date gain is close to 10%. Dow Jones hasn't moved so much yet. As I said before, technology gonna be the best performing stock setup this year. Look at this. Nasdaq jumped 25% year-to-date. So Nasdaq could a lot more to lose if a stock market crash happens and if there's a last minute panic. And one way to profit is to buy stocks that you really like when the stock market panics. Another way is to invest. Basically, invest means when Nasdaq went up, this went down. So you could see QID. So you can Google QID or you can look it up in your stockbroker. Look it up. QID year to date is went down 43.21%. If there's a stock market panic and flash crash, you could buy this before it happened to hedge again your portfolio. Right now, we have stocks in our portfolio. So how do we hedge it? We can buy this before crash happens. So temporarily, you profit, you sell it. You don't want to keep holding it because this is still a bull market. I'm not gonna keep holding this one. I'm not telling you to buy this QID. I'm thinking out loud. Hey, how do I hedge my portfolio? How do I get short-term profits? I could buy this before the crash happens, or I could buy call option on this when it jump significantly, maybe 1 or 2 days. I could take profits right away. Nasdaq jumped 2.19% on May 26th, so it dropped over 5%. So this is double. So if Nasdaq dropped by 1%, it jumped by 2%. So it's approximately double. So that's why I like this to hedge my portfolio. I can use call options, buy call option on this. I can sell put options. When you sell put option, when this jumps, you gain money. You sell high, you buy low. Put options. You buy low call options, then you sell high call options when the crash happens. This is not a financial advice. This is what I'm thinking, what I could do, and you can possibly look at it, and if you like it, you can do it yourself either. How do we buy QID call option? Go to your stockbroker. In my case, I use Robinhood. You don't have to use Robinhood. I look for QID, then come to the right if you're using desktop. Trade QID option. Click on it. Then you're gonna see the expiration date. Expiring on June 16. So you can possibly buy QID. You can choose any strike price you like. Maybe 13, 14, 12. But remember, the higher the strike price you use, the harder it is for QID to hit that price. So you could potentially lose more value if it doesn't hit your strike price. So I would personally prefer to use between in the money 13, 14 or 12. Remember, if you go down, you need to pay higher premium. 1.25 for $14 strike price, 2.1 for 13, 2.1 for 12. So you can possibly choose 14, 1.25, click on it. The maximum profit is unlimited. If you look at it on the right side, the maximum loss is 125, so which is not so bad. A break-even point will be 15.25. So if QID hit 15.25, you are break even. So you can click on continue if you want to buy this call option, and then confirm your order. That's it. If you have any questions, comment down below. Like, share, subscribe. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency.